we've had a gradual improvement in the economy and a gradual comeback of the consumer. It's been very slow. The economy has dragged along longer than people thought it should. Rates have been lower for longer than people thought that they would be. And I think so far the consumer is paying, with the gas savings, they're paying down debt. But the one slight increase in the consumer spending area has been in casual dining, which is usually the first part. If you're saving a few dollars on your tank of gas, you're going to go out for lunch or dinner. Then you'll start to upgrade your wardrobe. Then you'll start to upgrade your home goods and housing and home improvement. So it'll work its way through the economy.
First of all, you have to look at why we had such a correction in the dollar. And clearly, the market was very, very long dollars going into what was relatively weak data, as we were discussing earlier. So you've had a position squeeze in dollar positions. It seems to have run its course for now. We go back to the picture, which I think is the consensus, that most people still look for some degree of recovery in the second half, and starting from the second quarter. And the question is by how much rather than if.
I think it's an unwind of a situation where bond yields just went far too low, even considering the QE. I think European QE is a huge story. It is the biggest story, in my view, of 2015, because people have still not quite got their heads around just how big this operation is. In relation to the European bond markets, the ECB is buying 2.5 times the net issuance of European bonds. That's more than twice what the Fed did, what the Bank of England did, and it's bigger even than what the Bank of Japan is doing. So I think the QE trade is a genuine fundamental force in the markets.